Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of New York and London coffee markets. I'll start with New York coffee. Since the pacification of the market around the two lesser Fibonacci levels at 174.45 and 174.55 back in early August, prices have tried moving back up but have found it harder than back in July. Initially, we did indeed see prices push up over the very recent 50% Fibonacci line at 196.30, even as high as the 200 level in late August. However, it took until 2 weeks ago for the market to finally make it up over the 196.30 level, at least up over it with some serious intent. Yet this was ultimately at the cost of a lesser outside week when there was the opportunity to make that week a weekly key reversal up. This highlighted something I'd spoken about before, a possible pattern that may be forming since August. A possible ascending broadening wedge pattern. A not uncommon pattern, though not seen everywhere either. We've had two touches on each side, but no third one as yet, and we must have this. We must have that third touch before it can be verified. Yet this failure to follow on to this possible bullish pattern maybe because we have seen another newer pattern develop, a mid-August to mid-September bullish Andrews pitchfork. This one has some interesting features. For example, the upper tine, currently at 234.85, is running close to the upper trend line, currently 232.60. Additionally, and this is perhaps the most immediately interesting, is how the lower tine, currently 201.80, and the middle tine, currently 201.35, seem to have done a pretty good job of corralling the market higher. Thus, they have been indicating the bullish angle of attack of this market, at least until now. I suspect that it is this more recent pattern that is running the show, at least for now. So keep an eye on those two tines, the middle tine and lower tine, going forward. London coffee. I very well remember many weeks, probably now months ago, saying, and I quote, "I have deliberately left a broken early April to mid-May bullish Andrews pitchfork on this daily chart. In the recent past, this pitchfork has been crucial in setting the timing for the moves higher, but having broken both the upper tine, currently at 23.19, and the lower tine, currently 21.66, you'd think it would be no longer valid. However, not so. Most recently, the broken lower tone has started to once again indicate the bullish angle of attack of this market. Now, this may only last a few days or weeks. However, whilst it works, I'll keep it." End of quote. Well, you can see how even in these days, as we see the market edging sideways and out of this broken bullish Andrews pitchfork, how this same pitchfork has been valuable at indicating the bullish angle of attack. I guess I'll continue to stick with it until I find something better. That may be sooner than you may expect, as we seem to be having a topping action since mid-September, resulting in some notable declines and barely holding the highs we saw right at the middle of last month. Now, I am not saying that this is the end of the move higher. Not yet. It is, however, a warning call, and with enough of a move now to try testing lower. Now, even then, it may not be over for the bullish incentive, as we have a lot of congestion support from 2013 down to 1962. You can see it striated bands across the screen there, which may temper the bearish incentive, if not completely extinguish it. So watch this space. Thank you for listening. This weekly broadcast gives essential market patterns of consequence. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.